Nationwide's latest housing market report reveals a mixed picture, highlighting a deceleration in annual house price growth despite a marginal monthly increase. January saw a 0.1% rise compared to December, yet the annual rate softened to 4.1%. While this signals a cooling market at the year's outset, the 4.7% annual growth figure, representing the strongest performance since October 2022, paints a more nuanced. This October 2022 surge followed the tumultuous aftermath of former Prime Minister Liz Truss's ill-fated mini-budget, which triggered a sharp increase in borrowing costs and subsequent market volatility. The contrasting data points underscore the complexity of the current housing market landscape, where seemingly contradictory trends coexist. The report's findings stand in contrast to recent pronouncements from other market players. Earlier this week, London-based estate agency Foxtons reported a near-decade high in Capital House sales, forecasting a robust first quarter. This optimistic outlook highlights the geographical variations within the UK housing market, suggesting a potential divergence between London's performance and the broader national trend. The discrepancy might be attributed to various factors, including localized economic conditions, demographic shifts, and specific market. Nationwide's own previous assessment, issued earlier this month, predicted a surge in sales activity driven by buyers seeking to finalize transactions before the impending stamp duty changes. This rush, driven by the government's decision to revert stamp duty thresholds to pre-September 2022 levels, reflects the impact of fiscal policy on market behavior. The government's temporary increase in the nil rate band for stamp duty, introduced in September 2022, offered a significant incentive for homebuyers. This measure raised the threshold from £300,000 to £425,000 for first-time buyers, and from £125,000 to £250,000 for those purchasing additional properties. However, Shadow Chancellor Rachel Reeves's October bud. This impending change likely fueled the anticipated sales rush observed by Nationwide. The interplay between government policy, market sentiment, and regional variations contributes to the complexities of the UK housing market. While the overall annual growth rate has moderated, suggesting a potential slowdown, the strong performance in certain areas and the imminent changes to stamp duty regulations highlight the ongoing dynamic and unpredictable nature. Further analysis is needed to determine whether the recent slowdown reflects a sustainable trend or a temporary blip within the longer-term housing market trajectory. The interplay of various economic forces, including interest rates, inflation, and consumer confidence, will undoubtedly continue to shape the future direction of UK house prices. The divergence between national and regional trends underscores the importance of localized analysis to fully understand the evolving state of the housing market across different segments of the population.